Hey, folks, there's a new documentary out on HBO Max about MoviePass. It is a tech company that was founded by two African Americans. It talks about how the company imploded and those two brothers were removed from the company. Isaac Hayes III is the founder of Fanbase. Fanbase joins us in this weekly Tech Talk. Isaac, I saw your video you posted about MoviePass, and I remember when they launched. I remember when people were talking about it. Then I remember when they were like, what the hell? How they going to make money? It was all this sort of stuff. And then it lays, you just talk about how the documentary is just fascinating because it lays out how they then got removed from the company they founded.
Movie crash. I think you should definitely take a look at it as a black business owner. It was kind of like a very sad kind of corporate takeover of MoviePass, which was founded by Stacy Spikes and Hamet in 2011. They built MoviePass all the way up to about 20,000 subscribers. And they got a guy named Chris Kelly, who was the original general counsel for Facebook, to come in and invest in the company. And so when Chris Kelly joined the board, it was those two gentlemen and Chris Kelly on the board. And so what wound up happening is that MoviePass needed a little bit more capital, and they thought they should bring in a white CEO to actually run the company to try to scale the company. In comes Mitch Lowe, who was the former CEO of Redbox. And so they reconstituted the board to include the two black founders, Mitch Lowe, and then Chris Kelly wound up having two board seats. So now with Chris Kelly's two board seats and Mitch Lowe's one board seat, they wound up removing both gentlemen from the board and eventually firing both of them from the company and then tanking the entire company within 1 year, spending $150 million and crashing the company.
Wow.
Yeah.
Wow. So explain to people, and you talked about it beforehand, the pitfalls when you're a founder and you go out and you raise money and you don't fully understand why you got to hold on to as much power as possible, because in this case, you can get run out your own company.
Yeah, I mean, well, boards are very important. Boards are really basically the boss of the CEO. They're the people that are in charge and kind of guide the company and make and kind of keep the CEO accountable to the company. And so typically a lot of black founders wind themselves getting voted out of their own companies by these board takeovers by other people that are coming on the board. When it comes to the company that I built with Fanbase, I don't have a board. That's because I raised independent capital. I haven't gone to VCs. So you got to be careful when you're raising capital, especially from venture capital, because they do want things like board seats. And what happens is VCs will often look at your company as something to flip. So you might have $1 billion idea, and all they might want to do is give 4 times the return on the investment that they made. So they give you $1 million and they get $4 million. They'll be ready to sell your company way before you can take it to something to be a unicorn. So you got to be careful in the way that you constitute and construct your board. And MoviePass really bothered me because once Stacy and Hamet were gone, you have Mitch Lowe and Ted Farnsworth, who eventually wind up putting in a bunch of capital, and both of the guys are about to go on trial for securities fraud with the SEC, but they put founder and CEO of MoviePass. They totally whitewashed these two black guys out of the company. If you watch the documentary, there is a happy ending to the documentary. I won't give it away, but that part really bothered me, that these two guys built a company from the ground up from 2011 all the way to 2017, 18, and these guys come in and crash the company and take it over.
Absolutely crazy. Questions from our panel. Rebecca, you're first.
Hey, Isaac, it's Rebecca. It's good to see you again tonight. So for would-be founders, especially more of the tech space, what are like the top 3 things that Black founders should do to protect their company?
I think initially you should create multiple classes of stock, right? I think you should create 2 classes of stock, common stock and voting stock. And then I think as founders, you should try your best to maintain control of all the voting stock. So that way it gives yourself power, right? You want to try to put as much equity as you can yourself in your company so that it limits the amount of equity that people can take, which is ownership and power, and especially dealing with venture capital. it's tricky. So that's why, secondly, I think I recommend people trying equity crowdfunding, like what we've done with Fanbase, as an alternative way to raise capital. Because even with, you see what's going on with Fearless Fund and the fact that they lost their appeal in the 11th Circuit Court, it's just like we have to find ways to bypass these racist practices, right? And then I think, thirdly, you just have to be mindful of sometimes, especially as a Black founder, there might be an air of racism that might want to prevent you from scaling your company to being somebody that is a Zuckerberg or is a, Evan Spiegel or Jack Dorsey or somebody that builds a monster platform. So you really got to keep your head on the swivel about who's really, has your best interest in mind when you're constituting and constructing your company.
Scott?
Yeah, having advised a lot of entrepreneurs and folks like who have startups, whether it's in the IT space or otherwise, one of the things I would supplement your advice and counsel is that getting good counsel, getting a good accountant, getting a good kind of corporate strategist is really, really important. Money's tight and maybe you can't afford it, but you can't afford not to have it, because the way the company was set up, at least me extrapolating from your remarks and kind of, I looked this up before, there was a lot of money that was burned through, but the way the stocks were set up and the agreements with these folks that didn't look like them, it was teed up for them to be moved out of the company. And it happens in real estate. It happens in startups all the time. The founders had to know that they, in exchange for the money, they were subjecting themselves to some risk that they could be moved out of the company through these board seats. You agree or disagree with that?
No, that's true. I think Stacy and Hamet, trusted. They were too trusting and thinking.
No, yeah, you can't trust nobody.
You
can't trust nobody. Who you trust?
They were a little too trusting in that situation. And the way that I constructed Fanbase, honestly, I built it. I knew that but I remember this. Remember, Steve Jobs got voted out of Apple,
exactly
a company. So you always want to try to protect yourself as the founder as best you can. And so that's why those two classes of stock, I think, are extremely important in the way that you construct your company. But yeah, you got to keep your head on a swivel and be careful who you trust. And
you can't give up majority ownership of your stock or even put it at risk in exchange for that money piece. You cannot do that, because this is exactly what will happen by being too trusting, but also if you give up or put at risk your majority ownership. It's your idea, it's your passion, you're the entrepreneur. And, there's a saying with entrepreneurs, you go as long as you can until you can't manage how you've grown this thing, right? Then you got to either sell or you got to get out of it, if you will, up to your management experience. And so often entrepreneurs don't, one, realize that, but two, you should never give up or put at risk your majority stock interest, because it's your idea, it's your baby.
100%.
Robert?
Given the way that MoviePass ended and kind of the collapse of the company, is there ever something to be said for taking the money early, avoiding some of the risks down the line, and being able to cash out and simply invest that into another venture, particularly given when now you have people who are associated with the new company facing federal charges, et cetera?
Well, the irony in that is that Stacy and Hamet actually had equity in the company. And this is something that also happened, is that company kind of merged up under a publicly traded company and got acquired. So they were on the stock market. So the equity that both gentlemen had, the equity that Stacy had was worth about $80 million. But within that 1 year, there was a restriction that they couldn't sell their stock for 365 days. And that it went from $80 million down to pennies within 365 days because the guy spent $150 million. Mitch Lowe and Ted Farnsworth, they burnt all the money, gallivanting around Coachella, spending money, hosting events, hanging out with celebrities and partying. And they crashed the company with pennies in less than a year. And you have no control over that. So, yeah, that's something that was extremely terrible.
Oh, man. So, folks, be sure if you go to HBO Max, you can check the documentary out. Isaac, give us an update on the raise for Fanbase.
Hey, Fanbase, listen, we are raising right now on startengine.com/fanbase. everybody that hears my voice, go to startengine.com/fanbase and invest. We're almost at about $1.3 million. I'm raising $17 million. The minimum to invest is $399. You get 60 shares of Fanbase stock at $665 a share. And I think what's important about this, again, is these companies are changing. You see that Instagram is even trying out like unskippable ads, right? That you can't even scroll past the ads on the platform anymore. It's a lot of little things that are starting to happen with these companies. And so I think, again, the opportunity for users to have equity in social media, that is why I built Fanbase. So we're almost at about 700,000 users. We're on iOS and Android. We previously raised 10 million. So this isn't a far stretch for us to go ahead and raise to 17. And you have ownership, equity. We talk about equity so many times in a startup. And you can rise and grow with the growth of the company. So if you want to invest, go to startengine.com/fanbase. It's on my shirt. Make sure that you go check it out and have some equity. And I say this before, 28,500 people investing $600 is $17 million, and we can close our round. If you know some people, forward the link to them, tell your friends, invest for your grandkids, your kids, your friends, and let's all go together, because this is the opportunity to own part of a tech startup, a social media tech startup that is rivaling these other platforms that are actually copying what we do. So I'm really excited about this. And I want as many of us who look like us on the cap table as possible. So go to startengine.com/fanbase to invest. The minimum to invest is $399. I'll keep you posted, Roland, every time I come back on the show. But check out MoviePass. And as a founder, be careful who you let in the hen house.
Fanbase is pioneering a new era of social media for the creator economy. This next generation social media app with over 600,000 users is raising $17 million, and now is your chance to invest. For details on how to invest, visit startengine.com/fanbase or scan the QR code. Another way we're giving you the freedom to be you without limits.